Hello, this is Quant Trade Edge, and just a quick video before I hop on a flight. I wanted to follow up on the exact things we were talking about in yesterday's wrap-up. One, that gold would be an amazing setup. And, we said that because of the way it closed, towards the high of the day, long tail, green candle, coming down off of oversold. If you really want to get, look for reasons, 50 is usually a support level on the RSI 15. We got it on this day, and then we didn't confirm by closing below it. We popped back up, so that's a reasonable place to expect this to bounce. Similarly, on a 2-period RSI, I usually look at 5 as a very oversold level, and we got to 5.24 on this day, tested below and we're bouncing. And just following up on our Taylor, to have 2 PF3 downs, that's kind of all the strength that it's going to give. And then on this day, we did have a flip up in ROC. So this is the perfect Taylor timing for what we're trying to do as well. Let me get rid of these here and blow up the bars. And, again, this was something so good that I set my alarm at 1 a.m. to take a look. And we know that each market has its own times. Crude likes to make extremes at 4 a.m., gas at midnight or 6 a.m., and then a lot of things around 1 to 2 a.m., which is around the European Open. So again, the best thing about this is if you can see it while you're asleep on a small little phone squinting, that's a good pattern. Sometimes I wonder if the bigger and fancier screens we get, we're just able to justify worse and worse trades by seeing something in them. But this was 8 p.m. we broke above the previous day's high, and that's what made me think at 1 a.m. I better check my phone, and I set an alarm for that. But this is a straight move up. Now, you know what? I could add my I now have my automatic ones set up, so you can see from this top A, B, C. So here's our risk bar, and let me stick to the convention we've been using, putting that in a rectangle, and 4R off that rectangle is 48.50. We may hear a ding as we do this video. And I think this goes a lot higher. It was such a good daily setup that we could probably target a fib of this move down. Yeah, 65 should be very doable. Probably into this 2,000 level again, and then it's a matter of seeing whether we're going to make a lower high or continue higher. My bias is higher, but it's been higher for decades, so I wouldn't put a lot of faith in that. But this is a monthly chart, and as you can see, this is a very long cup. This is a 10-year cup and a 1-year handle, and the handle's higher. So it's not your standard cup and handle. It's a little bit higher here. I'm sure if you looked at it in inflation-adjusted terms, you would have a lower handle. But yeah, there's a lot of potential for this one risk bar to just shoot up to $2,500, and I don't mean that as in it's going to happen soon, but I mean it could do that before it takes out this 30-minute low of 1930 and a half. So I would definitely leave some runners on. I'm only going to take half off at 4 and probably half off at 8 just because I'm on vacation. But that's gold. Then I wanted to follow up on the very tight volatility contraction pattern we found on the Australian dollar yesterday. And, I think at the time of the video, we, were at about 3R on it. And just want to follow up on what happened there. And, forgive me, I haven't really looked yet. So I'm just getting oriented on this chart. But yeah, that wasn't it. Okay, I'm sorry, that's 8 p.m. There we go. This was it down here. Nope, that's 7 p.m. That's, oh, wow, geez, okay. this is it down here. This was that very, let me blow it up so you can see it. This was that very clean ABC that went into the EMA. And one thing I forgot to point out yesterday was also in the Keltner channels, you know, we had this action in the Keltner channels, and then we got a very clean ABC to the EMA, and then we popped up, and these were the actual bars here that gave us the ATR 3/20, the lowest volume since the Fed, all that stuff that gives us a good volatility contraction pattern. And, you know, imagine, you know, this hoagie right here being a risk bar is 5.5, 6.5 points wide. 72.81 is the high. And, you know, as you can see, the beauty of these points, and again, this is the big difference between trading and investing. When you're investing, you want to buy something as cheap as you can. You're not using leverage, and you will get, you know, the highest gains from it eventually. With trading, there are several other factors that you really need to keep in, you know, in your mind. One is you don't have to buy it the cheapest, right? Fading the Fed would have been buying it the cheapest. But you want to buy it at a point after which you're confident it's not going back down there. And that way you can use leverage and make huge multiples on your risk. And you also want to cycle your capital. So you don't want to sit here and wait all day to figure out if it worked or not. Once you have a defined pattern that you know is going to launch it, in hours you make what an investor could make, you know, in years. You know, in terms of risk relative to your capital. An investor risks $100, and maybe in 5 years it's $200. They've made 17% annual returns. You know, here you're making 1,000% on your, you know, on your risk amount. You could easily risk that $1,000 by doing 16 contracts, you know, at a 6.5 tick risk, and, you know, make that return very, very quickly. So I just wanted to preface that before I do this, because I have a feeling it's going to be huge. 72.81, and we got as high as 73.55. So yeah, on a 2-minute chart from there, we've basically, you know, gone up to here, and it sits at 11 over 11R over here. So usually from a VCP, you know, 8 is kind of a minimum target. You know, you could look at the chart and try to figure out other ways to get in or out. But one thing to keep in mind on this Australian dollar chart is we just had this ABC down as we're breaking out. Like if we were to look at a weekly, you know, you could see that, oh, I guess we're still bounded by that downtrend line in this channel here. So we've had an up, a down, and then Monday, if we take out this high, it's like we have a weekly confirmation. And this pattern here, when we took the original long from the other day, I did mention that this is a pattern that can run. And, you know, just a simple fib extension of it. Sorry, my computer is not cooperating this morning. It would not be unreasonable to expect 75.30, you know, and then 76. And depending on your time frame, when this weekly pattern finally breaks, which may be now, given the momentum that we're coming at it with, we're looking at 83 and 86. So anyway, just stuff to keep in mind. And again, you know, when it comes to cycling your capital, you may not want to sit on this for 3 months, you know, and have your capital tied up to get to 86, you know, when we have the ability to make 4, 10, 11 times our risk daily. But just things to think about. And one other thing I wanted to look at was crude. I just noticed that on my phone. Okay, so we are still inside, but that is a valid takeout of a green bar. Huge upper tail, so may or may not be the best setup in the world. And let's see. Ah, okay. Well, this looks like the variant on the natural gas trade where we took out this high, we took it out here, but then we took it out again here and basically formed a wedge, which was also a hoagie. And if I remember right from that natural gas trade, that only really had one more up leg to it before it kind of turned around. So, if you happen to have been up at 6 a.m., this was a very valid trade to take. We got the A up, and then we got the previous high violation, this green line, and then we, however you slice it, you can slice it as an A, B, C, where C didn't get down to A. You could slice it as a hoagie, or you could look at it as a wedge, draw on the lines and look at it as a wedge. But any and all of those were valid reasons to jump on the crude long with 5-minute risk against this daily pattern, which is making a higher high from the inside. The next test of this will be to get out of the 2-day high, which is 102.58, and it could potentially give you another trigger there. If we do take out that, you could then get another ABC down on a smaller time frame. So that's something you can look for. I will be heading to the airport. Hope you enjoyed this. Just keep it up, and it gets easier. Drop comments. I'm happy to answer comments while I'm gone all week, but I will not be posting videos. Have a good trading day.